currency problems are going to be continuing, and I think they are probably still mounting. And under those circumstances, I really can't see any meaningful selling of gold or silver. And I would have thought that, if anything, gold and silver represent really pretty good bolt holes for those getting out of these risky currencies.
The best performing asset in the first quarter and the second quarter of this calendar year, has been gold and silver and related mines, particularly mines. Mines have begun to really move. And how much have you got? Nothing.
The precious metals market is experiencing a significant rally in 2025, with gold and silver both reaching impressive heights as the US dollar faces unprecedented weakness. Gold has climbed to around $3,340 per ounce on Friday, marking a substantial weekly advance, while silver has held steady below the $37 mark, remaining within striking distance of a 2-week high reached the previous day. Alasdair Macleod, a prominent gold-focused monetary analyst and former banker, believes the current precious metals rally represents something more substantial than typical market froth. While acknowledging brief spikes in silver around the $37 mark and a morning rally in gold to $3,500, Macleod argues that neither metal has experienced a genuine frothy top, with both showing only minor reactions since their recent peaks. The dramatic surge in precious metals comes against the backdrop of a collapsing US dollar, which has experienced its worst performance in years. The dollar index, which measures the currency's strength against a basket of 6 major currencies, including the pound, euro, and yen, has plummeted 10.8% in the first half of 2025 alone. The greenback's decline has been particularly severe against individual currencies, tumbling roughly 13% against the euro and over 8% against the Japanese yen since January. This dollar weakness stems from what analysts describe as a perfect storm of economic and policy shifts under the Trump 2.0 administration. Concerns over the expanding U.S. fiscal deficit, combined with lingering tariff uncertainty, have significantly boosted gold's safe haven appeal among investors seeking refuge from currency instability. Under these deteriorating currency conditions, Macleod finds it difficult to envision any meaningful selling pressure on gold or silver. Instead, he views both metals as solid bolt holes for investors looking to escape the mounting risks associated with increasingly unstable fiat currencies. This perspective highlights the growing sentiment that the current environment of dollar weakness and fiscal uncertainty creates fundamentally supportive conditions for continued gains in precious metals. Before we begin, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Join the 2.6% who have by hitting that button and turning on the notification bell so you never miss an update.
Well, I don't think there've ever really been a frothy top. I mean, there was a very brief moment when you could say that silver was a frothy top, got up to what, sort of 37-ish, something like that. I mean, but really the reaction has been very, very minor from that frothy top. And the same with gold. I mean, gold sort of spiked up early one morning to 3,500, but it's just been moving sideways. And in these, as I was saying earlier, in these very quiet trading conditions, you would expect it to drift lower. I mean, I talk, if you like, as an ex-stockbroker, and I knew that in the case of any stock, and it's the same has got to be true of commodities, in the absence of buyers, prices go down. Now here we are with gold, close to all-time highs. You've got no interest in the market. I mean, really very little in retail interest, that is for sure, because everybody's just out there enjoying the weather. Or, and this is what I found as a stockbroker in the UK, I mean, it was so frustrating the summer months, because there was I on the floor of the stock exchange or in my office trying to contact clients to find that my competitors had taken them out to Ascot, Henley, all the sporting facilities. I couldn't get onto anyone and get them to deal because they were already being wined and dined by my competitors. So it's the same thing now. Nobody's interested. And you would think gold and silver would drift off, but no, they're not. I think part of the reason is the weakness in the dollar. I mean, I think you've got to look at the dollar from the foreigner's point of view, always. They own, in terms of dollars and underlying financial assets, including about, I suppose, 7.5 to 8, or no, it's about 7 trillion of bank deposits, figure like that. Total is just under 40 trillion, of which I think about 14.5 is in equities. I mean, this is a lot of stuff to be sitting on when the dollar's going down. And the dollar from President Trump's, if you like, Liberation Day on April the 2nd, dollars lost well over 10%. So where have you made up the currency loss on your underlying investments? Well, the answer is you basically haven't. You might have done a little bit, I suppose, if you'd sort of continued to invest in NASDAQ type stocks, the Magnificent Seven, because they perform reasonably well. But you're buying into hot air. I mean, come on. It's, the idea that these stocks are value, if you like, that's just nonsense. If I was a foreigner, I would be, I'd really be reducing my positions, particularly when you get President Trump turning around and saying, the dollar should be lower. Okay, well, if it's going to go lower, that's not going to do me any good. And also President Trump turning around and slagging off Jay Powell. I mean, you begin to think, well, who's running things here? Right? Slagging off Jay Powell is actually a very bad thing to do. I'm not saying that I think Jay Powell is necessarily the most wonderful human on the planet. But, if you want stability in a currency, the last thing you do is start slagging off the guy who's actually running the most important institution providing that stability. Currency problems are going to be continuing, and I think they are probably still mounting. And under those circumstances, I really can't see any meaningful selling of gold or silver. And I would have thought that, if anything, gold and silver represent really pretty good bolt holes for those getting out of these risky currencies.
Alasdair Macleod states that the precious metals sector has emerged as the standout performer in 2025, with gold, silver, and mining stocks leading performance across all asset classes in both the first and second quarters of the year. He knows that this exceptional showing continues a broader trend of precious metals dominating investment returns over the past decade. From 2015 to 2025, gold and silver have consistently ranked among the top-performing assets in 6 of the 11 years, demonstrating their strength during periods of economic uncertainty. Gold led in 2018, 2019, 2022, and 2025, reinforcing its role as a haven. Meanwhile, silver emerged as a standout in 2025, hitting 13-year highs and drawing strong interest from both institutional and retail investors. Macleod emphasizes that silver, long viewed primarily as an industrial metal, is regaining its monetary role as prices begin to rise again. This shift in perception reflects growing concerns about currency stability and the search for alternative stores of value. The metal's dual nature as both an industrial commodity and a monetary asset has positioned it uniquely in the current economic environment. Looking ahead, the outlook for precious metals remains bullish, with gold prices continuing to rise amid ongoing uncertainty in global markets. Silver is expected to post further gains in 2025 and 2026, supported by a combination of supply constraints, industrial demand, and increasing monetary demand as investors seek refuge from currency debasement and economic instability. Let's get back to the video.
I mean, basically, the other side of collapsing fiat currencies, and we are talking literally about events that are leading to the end of the fiat currency era that started in 1971. The other side of that is real money, which is without counterparty risk, in law, in everybody's common law, from Roman times, is gold, silver, and also cotton. It so happens that gold is, if you like, the numero uno of precious metals. That is what we concentrate on. That is what we talk about. What central banks are doing is they're not buying precious metals. They're getting the hell out of fiat currencies, and particularly dollars. That's why gold is now the second largest reserve monetary asset, if you like, throughout the central banking community. And rapidly increasing too. It would be increasing even more rapidly if they could find the physical, if you like, because there's such a shortage of physical with this sort of demand. I mean, what you're saying is people from the very, very top, like central bankers, sovereign wealth funds, and all the rest of it. The guys who won't tell you what's going on, but themselves actually understand what is going on and just want to hedge the position. They're buying gold. They haven't been buying silver because silver is, well, it's an industrial metal, but that's beginning to take off as we speak. I mean, today is Thursday and silver has now gone back up over $37. I guess it's going to eat further. Now, the point about mines, which got me, if you like, wandering off topic, is that it's the one sector which is underowned in, if you like, in regulated investments, because gold and silver are not regulated investments, and any compliance officer doesn't like a fund manager who goes out and buys physical gold or physical silver. So what does he do? He's got to buy. He's got to buy mines, and his problem is that he hasn't bought mines for an awful long time. He doesn't know anything about the sector. The brokers haven't made any money out of mining research for a long time, so they've cut back on their mining research. They're busy trying to hire. So what do you do? As an investment manager, the best performing asset in the first quarter and the second quarter of this calendar year, has been gold and silver and related mines, particularly mines. Mines have begun to really move. And how much have you got? Nothing. We still got the Magnificent Seven, and we got some crypto. This is a disaster. It is an absolute disaster for the investment management industry. So, what does this mean for mine stocks? It's quite clear to me that the whole sector has got a huge move ahead of it in an upward direction, while everybody tries to scramble out of the rubbish that's falling. According to US Treasury tick figures, foreigners own just a short 40 trillion of US dollars and underlying financial assets. That's more than the GDP. It's 20% more or whatever the figure is. So that's something which it needs to be factored in. We got to realize that you've got to keep the foreigners on side. Otherwise, they're going to kill your markets. And I can't see that there's any understanding at the political level of just how serious this danger is. I think the most important thing is bond yields. Most of the major G7 countries are in debt traps. The reason they're in debt traps is because their economies are going into recession, and the increase in the rate of taxation is therefore going to go backwards. And this is absolutely vital when it comes to assessing the viability of debt, because if the rate of debt is increasing more rapidly than the ability to pay it down, in effect, it doesn't matter whether you're a country or a corporation or an individual, you are in a debt trap and you are in trouble, and you've got to do something about it. I see no sign at all of any politicians anywhere in the world actually realizing how serious this problem is.
Gold and silver continue to assert their dominance as trusted assets in an increasingly unstable financial environment. With gold reaffirming its role as a reliable store of value and silver gaining momentum as both a monetary and investment metal, both are drawing heightened attention from global investors. Are gold and silver the safest assets in today's economy? Share your thoughts in the comments. If you found this video helpful, give it a like, share it with others, and don't forget to subscribe. Only 2.6% have. So hit that button and turn on the bell for more insights on gold and silver.